Welcome back to the housing update for Southwest Florida for October 2025. I'm Mary Bartos with the Bartos Group.
Cheryl Stokes, New American Funding.
And we're going to get right into it, Cheryl. So 4 things we're going to talk about today. Everybody's talking about the Fed, what just happened, what's planned ahead, 2026 expectations, and then the quote local market. So let's kind of look through this. Number of homes for sale continues to be higher than the last year. So this is by realtor.com, and you can see the last 4 months. This had September data of 2025. I mean, it seems to be averaging out, and this is national data. Let's put that as well. So that's month over month, and you can see there's more homes for sale.
Yes.
Which makes sense. As you also can see in this chart of the U.S., that the average in August, so we don't have September data, is 20.3% of homes listings had price modifications. Here in Florida, we're at 22%.
Right.
So very normal.
Very normal, and they're going to modify their prices as inventory rises because they want their house to be more attractive.
Absolutely.
Buyers.
Absolutely. So then you look at home price growth, and that's moderating. So back in January of 24, people were seeing a 6.5% year over year increase nationwide. And then, July, which was the last data that FHFA had, easy for me to say, was 2.3%. So you are seeing it come down nationally.
Right.
But it's not negative, right?
It's not negative. And if you listen to the news, a lot of people think the market is crashing. It is not crashing. It's leveling.
Absolutely. I love that you said that. So Anthony Smith, our senior economist at realtor.com, what's he saying?
He says, while national prices continue to climb, local market conditions have become increasingly fragmented. This regional divide is expected to continue influencing price dynamics and sales activity as the fall season gets underway.
Makes sense.
Yep.
And we've been talking about this for a few months. We have the snow states and the sand states. And you can see the price, the home price trends are above zero. In most of those cities we're going to call them snow states. And then in the sand states, for most of those cities, it's a negative number. Now, that's not us here. We're going to talk about our numbers.
Right.
But this is the poll that Raz Club, that Zillow pulled out. Raz Club, I don't know those guys, but anyway, they pulled this out. I think it's an interesting slide to show the differences between those two. So if you're coming up from a snow state and, you're thinking about selling your home down here, and you're like, well, my house in, let's just use New Jersey, for example, went like in a nanosecond. We're not the same market.
We're not the same market. And we have more inventory than they do currently.
Absolutely.
Yep.
So what's on your mind, Cheryl? The Fed forecast and future is near to your heart.
It's on everybody's mind.
So talk about this, about inflation remaining elevated.
So this graph shows that inflation is still above the 2% target that you always hear the Fed talk about. It's much closer than it was. And the Fed did have a cut this last time, even though it remains elevated. But that's because they're looking at balancing many indicators to determine when they're going to cut and when they're going to increase. So we're getting a lot closer to that target rate.
I love that. That's awesome for everyone. And unemployment is a thing. As it relates to mortgages. Yeah. So talk about this slide.
Yes. So people think that when they hear the Fed rate is going to cut, that translates immediately into lower mortgage rates. And that's just not the case. We are not directly tied to the Fed. That's just one indicator for mortgage rates. Another indicator for the Fed and for us is unemployment. And it is holding steady, but you'll notice it's ticked up just a teensy bit in the last couple of months.
And when you look at that as job growth is stalling out, that they kind of play with each other.
They do. And that's what the Fed's looking at. And really, I think, and I am not the Fed.
Nor am I.
But because job growth is stalling out, even though their inflation is still high, they have to look at that balance and they cut because that risk outweighs the current rate of inflation when they're weighing risks and balancing.
Right. Exactly. So Let's see what NPR is saying.
NPR is saying the Fed faces another rate-setting decision in 4 weeks, and policymakers would like to have up-to-date information on hiring and unemployment.
Which, we're sitting here recording this on October 17th, and we are still in a federal shutdown.
So we might not have that information.
We may not have that information, so they may not be able to do anything until they get it. Or who knows?
Right.
We're kind of in a...
Or maybe they have some kind of information that they can make a decision. We're kind of in a little bit of a flux state right now with all the reporting.
Yeah. So, it could come back. I haven't
They
seen
could come
the
back
news.
tomorrow.
Yeah, I haven't seen the news, but hopefully they kind of work that out because that's a little bit ridiculous. So people worry about an upcoming recession. And this slide really talks about 2 out of 3 think a recession is coming.
Yep.
May or may not. But I think the interesting part of this, Cheryl, is 74% of Americans, now this is from Lending Tree,
Right.
who did the study, admit that world news and or current events affect their financial decisions.
We know that's true. And let's think about this. A year ago, this time in the fall, we were saying that part of the problem with the market is uncertainty of what was going to happen with the election, uncertainty in general. Well, what we have this year is just more uncertainty, but a different kind of uncertainty. Their fears have not been alleviated. And as long as there's uncertainty, they're going to think twice about the financial decisions they're making.
Of course. So, if you're thinking about buying or selling, we get it.
Yep.
But we want to help you through that process to be that trusted advisor.
Yeah.
Absolutely. To be your trusted advisor. Now, I love this mortgage rate projection that Fannie, MBA, and Wells Fargo gave. And they're anywhere from in the fourth quarter of 26, so a year from now, at the end of that, anywhere from 5.9 to 6.4.
Yes. They are. So I had a conversation the other day because you and I have looked at these projections now for years. And we have all these projections, and frankly, we do not know what they're going to be.
That's right.
These are great projections, and if we were in the 5s at the end of 2026, I think we would have a completely different market. Totally given. Are they correct? I cannot say whatsoever. And that's what I explain to my clients. Let's look at what the rates are today and figure out the most affordable way for you to get to your goal today, because we cannot predict what they're going to be. And if you do wait around, are you missing out on your favorite, best opportunity, dream house?
Right.
Because you're waiting on a decision that is a maybe.
Yeah.
How can we make it work otherwise?
Well, and Cheryl, we stay tuned for this because this is a sneak preview. We're going to do a video on that about ways to actually, get a mortgage rate down to get the best deal. Stay tuned for that because that's pretty awesome. And we'll have a blog on that as well so that you can kind of see what that's about. But as we kind of go down this mortgage interest rate, there is a tie with the 10-year Treasury.
There is. And so that's, again, where I say, don't look just at the Fed. There are many indicators in rates. And you can see from this graph, we tend to trend with the Treasury.
Yeah.
So if you're watching the Treasury, if that's something that you watch, that's an indicator for you.
Absolutely. An average spread between mortgage rate and the Treasury is historically been 1.76%. Where right now we were as high as 2.76.
Yep.
And we're coming down. And what month was this? This is September?
September?
Yeah. September, it had a spread of 2.1.
Right. So we're headed in the right direction. I think we are trending positively. I think it's just not happening as fast as people expected or wanted. And we just have to continue to watch the market as it moves.
Love that. So what does Samir... did he say from One Real Mortgage?
So, here you go. With expectations growing for a rate cut at the Fed's next meeting, this could just be the beginning of a stronger housing market heading into the fall. It could.
Yeah.
But again, the last 2 times the Fed cut, interest rates went up because there were other indicators that offset what they were doing. It's a multi-tiered process. It's not just one indicator.
Wah, wah, wah.
Sorry. I'd rather be honest.
She's a little too honest. Just kidding. That's exactly what you want in a lender. Somebody honest. Lower rates equal stronger demand. We all
Always.
agree. So, if you're up above 7, you're going to have weak buyer demand. And if you're in that close to 6 or even 5, you have stronger demand.
And you'll see that in the last month, the couple of weeks where we hit that mid to low 6 range, we automatically that week had more mortgage pulls, more inquiries, more applications nationwide. So mid to low 6s and then tipping into the 5s will make a big difference in the market.
Yeah, that will be wonderful. Again, perception,
Yes.
not necessarily what that's going to do to your mortgage, but keep in mind, stay tuned. We're going to give you another episode of Really Mary to talk about how you can actually get some great things for yourself. Now, I do love this slide, Cheryl. I've been talking with my clients about it a lot because Fannie Mae, their price index came out, and they're looking between Q3 of 25, which we just finished, and Q4 of 29. So in essence, 4 years, right? And they had a core panel. They had a panel that voted, and the most optimistic quartiles thought that the prices would increase by 25.8%, which is a little over 6%. So now I've got maybe I've got a mortgage coming down, but a house that's appreciating each year 6 point some odd percent. That's pretty good.
That's great.
Right? So from that perspective, then you've got the least optimistic or the most pessimistic, and they're down to 4.9, but that says I'm going to increase by 1 to 2% every year for those 4 years.
Right.
So none of those are zero or negative.
Correct. There's some appreciation in every projection. And if the trend of rates goes down and if demand goes up and inventory lows, of course, we're going to have price increases because it's all about sales and demand and inventory.
Absolutely. Absolutely. So, if you're out there thinking, had a client of mine, I love you, you know who you are. If you're listening to this, I've been caught with a filing knife and I've gotten cut before. We don't see that with this market. We don't see where the prices are going now. We don't have, crystal balls, and we'd love to tell you we did, but the analysts are all saying this. They also are projecting more homes that will be sold in 2026 as well. You wanted to say something, Cheryl.
Well, I was just going to say the thing to remember where people say they were caught with a falling knife and people are worried about a downturn or a crash. The thing to remember that is different today is many people were upside down in equity when the crash happened. They owed more than the value of their homes.
Yeah.
That's not the case now. 60% of America has more than 30% equity in their homes. The equity balance has completely changed, and that is why we won't have a crash.
Yeah.
We have value in our homes that we did not have then.
I love that. You heard it here. So let's talk about the current market. We split these into slides that are very similar to what we just talked about. So home for sales in Southwest Florida from September, InfoSparks that's coming out of Naples, the MLS, is actually showing that we're I would say the homes for sale, we're not increasing greatly. I mean, Naples, it went up, but between last year and this year, they're very stable.
About the same.
So great perspective on what's for sale. Now, let's look at pendings. Pending sales, they kind of been, again, pretty stable, I would say. Yes, there are variations, but they're not wide.
Yep.
The thing that you got to know, though, is, and this is an interesting fact, 47% of homes that were put on the market this year, I just did this analysis a few weeks ago, actually went pending. That's like 1 out of 2. So that tells me you price it right with the right condition and you're going to sell your home.
It will sell. Yep.
But if you don't, you're in, jail.
Right.
Call it inventory jail. So those are homes that are sold. Here's total closed sales. Again, very stable, in my opinion. You know, based on market, some are up, some are down, but again, pretty good. And the last but not least of these slides, Cheryl, is price.
Right.
Again, you're seeing numbers go up and down, but take the same colored number. So orange, for example, is Marco Island, blue is Naples, red is Fort Myers, and green is Bonita. Look at those. These are year-over-year numbers for September, and look how they compare. So when people ask me, and these are median closed price.
Yep.
When people ask me, you know, about a specific area, I'm like, has the prices gone down? I'm like, no. And I send them this chart because
they're not
tells a story
dropping rapidly. No, we've leveled off.
Absolutely. So Cheryl, my question always, is it time to move?
And my answer always, yes, it is.
And it depends.
It depends.
Right? I mean, are you looking to get a bigger house, get a smaller house, you know, move up to the north, move from the north down, you know, depending on where you are and what's important, another investment property.
Right.
All of those things make sense if that's you. That doesn't make sense if it's not you.
Right. And that's when you rely on the experts to help you determine what's your end goal and how do you get there, and does it make financial sense to do it.
So until next time, I'm Mary Bartos with the Bartos Group.
Cheryl Stokes, New American Funding.
We look forward to seeing you here in Paradise, at least advising you on your options.